Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, happy Monday. Welcome to the COB. I'm Juliette Sarli. Great to have your company. Let's get you caught up on where the local market is tracking as we finish the day's trade. And we have retreated somewhat from those record highs reached on Friday. A little bit of weakness, or quite a bit of weakness, I should say, coming through from the banks, weighing us down today. We'll get into what Westpac updated the market with shortly. Of course, you've got the big one, CBA, coming through on Wednesday. Lachlan Holloway from Morningstar saying, look, the bar every time for CBA is just set so high for them to meet investor expectations, particularly given the strong valuation of the stock. So they are staying away for now. And certainly it does seem like investors are pulling out of some of these banking players. Materials, healthcare, telco stocks all did very well today. So let's get you caught up on, I guess, what were the key themes of the day. And it really was this Monday mope as we fell from highs amid this Westpac warning, with Westpac the first of the big four banks to report that confirmed weakening economic conditions are filtering through to the bottom line ahead of the RBA's rate decision on Tuesday. And of course, it is reporting reckoning with a big week ahead. We've got CBA, we'll be speaking to the CEO, Matt Common. We've got AGL, we'll be speaking to the CFO, Gary Brown. We've got IAG, we'll be speaking to the CFO, William McDonnell as well. So keep it here on AusBiz all week. Let's get you caught up on how the banks fared today. Amid that Westpac warning, shares down by 5.5% for Westpac. CBA fell by more than 2% to $174. NAB, ANZ, Macquarie also under pressure. Having a look at what we saw with the gold stocks, though, they did very well. We've got gold prices actually at a 7-week high amid the weak US jobs data, which dented rate hike bets in the US. Northern Star up 2%, Evolution up 3%, Newmont is firmer by more than 5%. And then having a look at defensive healthcare stocks as well, which were mostly higher, apart from Sigma Health, which was down by 0.7%. Well, Westpac also says mortgage applications have fallen 20% since the government announced changes to negative gearing and capital gains tax. Shares, as I mentioned, down 5.5%. Fleet Partners Group, though, it had a great day, jumping after knocking back a $3.60 takeover bid from SG Fleet and receiving a higher $3.80 offer from Element Fleet Management. Tabcorp also had a good session after agreeing to buy BetMakers for $267 million, and BetMakers surged as well, while Treasury Wine Estates gained more than 4.5% despite announcing another $558 million in write-downs, mostly tied to its US business. And Car Group was in the driver's seat after reporting a 14% rise in annual profit. Elsewhere, we're watching oOh!media. It's entered into a binding agreement for oOh!bidco, an entity owned and controlled by I2 Capital and its affiliates, to acquire all of its shares for total cash consideration of $1.70 per share. Over the year, shares have fallen to $1.66. Well, let's welcome to the COB David Scutt from StoneX. Scutty, always good to see you. I guess the key point for traders really was that jobs report coming through on Friday. What are you seeing in terms of where the labour market is holding up, and I guess what it means for the Fed?
G'day, Juliette. Great to be back. And yes, more broadly, that jobs report really set up what we saw over the course of today's session across most of Asia. But yeah, the payrolls report, another really soft one on the back of what we saw in June, a 23,000 decrease in payrolls. But can we trust the signal? And that's where I keep coming back to, because we're seeing this pattern emerge at the moment in the United States data that we continually see undershoots coming through in the month of July. Unemployment fell to 4.1% as well, very soft wage pressure. So when you put that into the mix, it's difficult to go and get too much of a strong feeling here as to exactly what's going on in the US labor market. All the other data has been pretty solid. This week is going to be all about inflation, though, and that's Citi's economic inflation surprise index. So basically tracking how inflation prints relative to expectations. So remembering back, we've got a pretty subdued figure expected at the core level for both PPI and CPI, 0.2% apiece. Now, that indicator from Citi suggests that if there is a directional risk when it comes to those releases, it's either to be in line or on the downside. So it's been very, very interesting few days for the US economy, and it's going to be a big event, that CPI report on Wednesday.
And I guess it's as well just coming into what we're seeing more broadly with the overall economy. And you touched here on the city's economic surprise index, which has cooled noticeably. How important is this?
Yeah, so this is obviously a real top-down view about what's going on in the US economy, and no one can dispute, no, it's miles above everything else, every other major developed economy in the world in terms of its performance. But it's not been able to go and continue to go and just beat relentlessly when it comes to those key economic data releases. So City's Economic Surprise Index, which is basically not just that inflation measure, but no, more broadly, has fallen to levels not seen since early May. So you put that into the mix, and it explains a lot of the price action that we're seeing at the moment. It's not just a story about strong earnings in the States. We're seeing the US dollar index is come off the boil a little bit. We've seen that ever so gradually yields have also gone and come a little bit lower as well. And you're seeing that Fed pricing for rate hikes, this is going out to June of next year. You think back to the latter parts of July, it was sitting around about 62 basis points of hikes over that period. We're now down to about 42.5 basis points. So it's been a pretty meaningful adjustment. And in that period, the dollar's come off, yields have come off, and we've seen that risk appetite has gone pop. And we saw that, you mentioned what's going on in gold. That's one of the byproducts that we've seen in a market reaction.
We love that, and that big move in gold has been quite extraordinary. What are some of the key events for markets this week from a macro perspective?
Yeah, it comes down to, like, obviously here domestically, we'll probably touch upon the RBA in a minute, but it really comes down to that inflation report in the States. That's going to be the key one. That, along with Thursday's PPI, is going to go and feed into the core PCE deflator, the Fed's, at this point in time, preferred inflation measure. But that's going to be really, really key. We don't get a really ugly surprise. It suggests that a lot of extension of these moves that we're seeing in the US dollar, in yields, in Fed pricing, in risk appetite, could extend further. And that, to me, is the baseline, what I'm expecting over the course of the coming days, an extension more broadly of this recovery in risk appetite.
Yeah, you mentioned the RBA. It's a big one for tomorrow. Market pricing really been very minimal for an expected hike, but are we at the peak, do you think, for the cash rate?
I still think so. Although I must admit the household spending indicator that came out last week was very, very strong at the discretionary level, which raises some concerns when it comes to the RBA and its reaction function. It's still seeing that growth is pretty strong in the domestic economy, even with the recent increases coming through in the cash rate, declines in house prices and the like. So that is keeping them kind of interested in a hike. This week, there's almost no chance. There's about 2.5% probability of a hike that's been priced in by futures, and that's been the same way for weeks on end. So what the key thing is going to be is what's in the updated forecast, remembering, of course, that back 3 months ago, the RBA overestimated how hot inflation would be, it underestimated how much unemployment would go and increase. So you put that into the mix. I don't think they're going to be any more hawkish than what they were back then. But certainly that's going to be really the talking point. And will they start setting up the boundaries as to what could go and get them to go and hike rates again later this year? Because cash rate futures at this point still have a move by the end of this year as a coin flip. So it's going to be a pretty important meeting, even though it's very unlikely to see an actual adjustment in the cash rate.
Now, I know you don't cover specific stocks, but I'm curious to get your thoughts on what Westpac said today, with mortgage applications down 20% since the government announced changes to negative gearing and capital gains tax amid this RBA pricing. Because, as you say, when housing sentiment is so weak, the market pricing can only do so much, right?
Absolutely. And I've got to say, I'm pretty shocked that the market was surprised at the update that came through. And remembering, this is only to the end of June. So we've had another 8 weeks beyond that. And we've seen auction clearance rates are through the floor. We've seen the price declines more broadly across the country have accelerated to the downside. So I think what Westpac reported was not surprising in the slightest, because you put on top of that, we've had 3 rate increases coming through from the RBA earlier this year as well. And so you talked about what's going to come up with this CBA result on Wednesday. I suspect we're going to see many of the same trends. And the concern is that chart there. So this is a weekly chart of the ASX 200 Banks Index. And at the moment, it's not the weekly candle's obviously not finished at this point, but we've got an evening star 3 candle reversal pattern in the making, which warns about downside risk. Now, if you look down to where this rally started from at the start of July, there's a little black circle, and that was the opposite. That was a morning star pattern. So we've got this very, very dour earnings report coming through when it comes to the outlook. We've got major earnings results in the CBA coming up, and we've got a price signal here that's warning about downside. So there is every chance we're going to see a correction take place in the banking sector. We don't have really a lot to go hang on. There's not a lot of earnings growth coming through, and it's a tough macroeconomic environment.
It certainly is. All right, we'll see what tomorrow brings. Scuddy, appreciate your insights as always. That is David Scutt there from StoneX. Getting back to equity specific, the stock of the day on the call was Car Group. Now, the digital vehicle marketplace reported an 11% rise in net profit revenue, up 12%, both on a constant currency basis. And we spoke to our experts, David Novak from Wealthwise Education, Jonathan Takadina from MPC Markets.
I think that they're actually part of a bigger wave here. And so that's why I think the numbers have done well. I mean, like, they were hit because of the SaaS apocalypse, and now we've seen a lot of the SaaS stocks bottom out and starting to bounce from here. So I think they've got two sort of big sort of pushes behind them. So obviously the SaaS stocks are starting to rebound from here, and then you've got Chinese car manufacturers that will undercut a lot of the traditional manufacturers, but you'll see volumes rise there. So I think because of those two waves, I'm happy to put a buy in car sales here at these levels. Now, I'm not saying buy it today because obviously it's had a big spike up, and I've found here in Australia that when stocks break out, they do retrace a bit. So I'd look for that retracement.
The result was good, but like I said, their biggest investment was this US acquisition called the Trader Interactive, and I mean, the lift in dividend. I mean, it was $42 last year. This time last year, here it is bouncing up, and technically it looks good because it's just broken above that resistance where it's consolidating at $28. So I'd be at best a hold. I wouldn't jump in and buy it today, as Jonathan said, because it's gapped up about 8-9%.
Let's have a look at the market leaders today, kicking it off with Car Group, which was the stock of the day that you just heard of. Resolute Mining had a good session, as did Seek, Mesoblast and Kingsgate consolidated. So no surprise, some of the goldies are doing very well there, with gold at a 7-week high. The laggards, though, in today's market included Arena REIT after its market update, also Westpac, which we touched on, Beach Energy, which reported last week, Codan and News Corp also coming under some pressure after it reported, of course, Thursday evening, and we responded on Friday to that result. Let's have a look at the small end of town, kicking it off with BetMakers Tech on that tie-up that we touched on. Shares up more than 30%. Avita Medical also looked good. The laggards, though, included these stocks on your screen, like Invictus Energy. In fact, a lot of the energy stocks there, global oil prices, of course, still fluctuating amid the Iran negotiations. Let's have a look at what we are looking out for tonight. We've got FOMC member Hammock speaking, also the Cleveland Fed inflation expectations and earnings from Rocket Lab. Tomorrow, more earnings here, but what of course the big one is the RBA policy decision and statement, and then the accompanying press conference, which AusBiz will be at. NAB business survey as well, and earnings from Life 360, which will be through after the bell tomorrow, SGH and Southern Cross. And we will be speaking to Ryan Stokes from SGH and also the Southern Cross Media CEO as well. So again, all the CEOs here, keep it tuned. All right, let's have a quick look at where the market has finished the day's trade. Down 0.4% as we eased from those records that we saw on Friday. The S&P ASX 200 down 31 points, a third of 1%, 9,232 points. That's where we leave you this Monday. We'll see you bright and early from 9:45 a.m. Eastern tomorrow.